What's going on, you beautiful, beautiful ladies and gentlemen? I'm here to teach you technical analysis. I've been trading for 4 years, started with Forex, then traded stocks, then traded options, and now I'm trading crypto. And I'm going to teach you everything that I know. All right? Everything that I know. And you can come back to this video as many times as you want until you feel like you are one with the candles. All right. And if you get discouraged and you think you're not making progress, don't worry about it. Just keep putting one foot in front of the other. And eventually you'll wake up one day and you'll start recognizing patterns left and right. They will jump out at you off of the screen. So the reason I'm making this video is because I joined crypto Twitter in October of 2023. And I just assumed, I come from trading in the stock market, and I just assumed everybody was doing TA. And it couldn't have been far off. And then the TA that I do see, the charts that I do see, most of them are way off. There's a couple guys that are really proficient, and I look to them for points of confluence when I'm conducting my own thesis. But for the most part, a lot of the charts that I see are way off. And it's all good, man. It's all good. You got to crawl before you can stand up, and then walk, and then run, and then jump, and then fly. So we're going to get right to it. This is for trading anything with a price attached to it, okay? So you can use this for crypto, stocks, Forex, whatever you want, man. The price of eggs in China, whatever you want. So first off, I'm going to show you guys candlestick patterns because that's how I started. And by the way, the goal of technical analysis is to put probability on your side. That's all it is. You're not going to be right 100% of the time. I'm nowhere near 100% success rate, but I'm successful enough to be profitable. All right. And along with that comes knowing your risk tolerance, knowing risk management, knowing your take profit and stop loss before you enter a trade. Man, discipline, really discipline is 90% of trading, is like sticking to your trade thesis no matter if you get greedy or you get nervous, sticking to your initial trade thesis. Now, obviously, on the longer time frames, it's okay to change your thesis as you go. Maybe there's a macro event that affects everything, or there's like breaking news or like an earnings report in the stock market. Things come up. So you can change your trade thesis. But for the most part, stick to what you set out and you'll make the most amount of money. This is not financial advice. I'm not a financial advisor. Please do not make investments based on what I say in these videos. And this video is brought to you by BingX. If you want to trade spot, you want to trade leverage, those guys are the real deal. I've been partnered with them for 3 years, actually. Good team over there. So sign up with my link below, and you'll probably get some free money just for doing that. Okay, so right off the bat, candlestick patterns. And I have Bitcoin, Ponky, great meme coin, and Solana up, ready to go. So I'm going to show you real examples, all right? And after you watch these videos, you can take notes if you want, but just soak it up, baby. Just soak it up. And you can take notes, but honestly, just the more time you have your eyes on the screen looking at charts, the quicker you'll be to recognize patterns. And that's all this is, just pattern recognition. So people ask me all the time, like what are you looking at? How'd you see that? It's like, I've just looked at charts for 4 years straight, like till my eyes bled. So you don't have to do that. But the more effort you put in, the more you're going to get out of it. All right. So candlestick patterns, man. This is the first thing that I learned. All right. So you have bullish patterns, you have bearish patterns, you have continuation patterns, and you have reversal patterns. All right. So let's just draw a few out, man. Let's just draw a few out. All right. So right off the bat, the most popular is a bull flag. All right, that is a bull flag. It's typically bullish, but honestly, if you ask technical analyst Thomas Bulkowski, who I've learned a ton from, I think the success rate on a bull flag is like around 60%, 65%. It's not overwhelmingly successful, to be honest. So that's where your levels come in. So you got top side resistance, and then you have bottom side support. All right, so that's a bull flag. You see them all the time. And little side note, the way you measure out the next leg is, this one has a big flagpole, but the way you measure out the next leg is you go from the breakout point, so wherever it breaks this resistance level, you go up the length of the flagpole. So you take from the bottom of the flagpole to the breakout point. Let's say it breaks out right here at 117,000. All right, so that is 94,000 to 117,000. That's 6 plus 17. That would be 23,000. Okay, so that's how you measure the next leg up. You go from the breakout point. I'm gonna have to, and you add 23,000, and you would get 140,000. So that's how you would get a price target on a bull flag. Back to the candlestick patterns, okay? So that's a bull flag. You have the opposite. So that's a continuation pattern. You have the opposite, which is a bear flag. It's not something that is talked about or really seen a whole lot, to be honest. But yeah, you have bear flag as well. That would be resistance. This would be support. Cool. We'll do yellow. So that's a bear flag. It looks similar to a rising wedge. Looks very similar, and they're both continuation patterns. So typically these would break down out of support, come back to retest. So your old support becomes new resistance, and then continues down and makes a downtrend. All right. Speaking of trends, this is an uptrend. Higher high, higher low, higher high, higher low, higher high. That is an uptrend. All right. When I realized this, everything changed. And it sounds really simple, but it helps you to figure out where you are in the trajectory of price action movement. Okay, so that's an uptrend. It's simply a series of higher highs and higher lows. Now, when it fails to make a higher high than that, so say it does one of these numbers, an M pattern or a double top. That's a candlestick pattern, by the way. A double top, you have a neckline right here. I'll talk about that in a few moments. And then comes back down, breaks through that neckline, so converts old support to new resistance, and then you have now a downtrend. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. All right? So you got an uptrend right here. Lower low, you have lower high right here. And to anybody that's really taking this in and really taking the time to learn it, my hat is off to you, man. It's going to pay off in dividends. Honestly, there's a few things, a few skills that I've learned in life, and this one has paid off arguably the most. So a downtrend is just a series of lower lows and lower highs. That's all it is. An uptrend is the opposite. Series of higher highs and higher lows. All right. And then in between that is just consolidation. They call it chop, whatever you want to call it, where the market hasn't chosen a direction yet. Where it's neither bearish nor bullish. All right, so what do we do? A bull flag, a bear flag. We did double top like I just showed you. So it comes up, makes these two highs at the same level. And then this midpoint between the two highs, that level where it stops at is your neckline. All right. So a double top is typically a reversal pattern. It's after an uptrend. So you have price going up, double top. It fails to make that higher high, which would be a continuation of the uptrend. And it comes back, breaks through this neckline right here, retests it as new resistance, and then continues down. That's a double top. So double tops are typically, they are bearish. All right. Now, a double top is the opposite of everybody's favorite pattern, double bottom. This is the most common one. You see it a lot. You hear people talking about it. It's just a double bottom, all right? So you have this lower low, lower high, lower low. Again, it's just the opposite. And you can flip these things too. It's pretty cool. So double bottom, lower low, lower high, lower low. Neckline is right here. So again, it's just the same thing as the double top. The midpoint is where the neckline is right here. On this chart, it'd be 117K. And then the double bottom, you have the first bottom right here, first bottom or second bottom right here, at both at similar places, right? It doesn't have to be on the dot. Nothing is ever exact. It's always a range, your levels of support and resistance. So you have first leg up to the neckline, down to the second leg, up to the neckline again. And this is what you want to see on a double bottom, right? You want to see first bottom neckline, second bottom neckline break through this time so it doesn't get rejected like the midpoint. Breaks through, turns old resistance into new support. You're flipping the resistance for new support, and it's a beautiful thing to watch. So you watch it come up, breach through. You want to see coinciding volume down here. If there were volume bars, you would see significant volume increase during this breakout. You always want to see volume with a breakout. Otherwise, it's not really confirmed as a breakout, all right? It's not strong enough to be a legit breakout. Usually it will be a false breakout if there's not coinciding volume. So you have this breakthrough above and then retest for support and then continue up. Higher highs, higher lows. That's a double bottom. Speaking of bottoms, it can be a triple bottom. 1, 2, 3, and it's the exact same thing. You have the neckline at the points it gets rejected at. 3 bottoms right here, and then eventually, triple bottoms are stronger than double bottoms, by the way. So they're gonna bounce harder. Breakthrough, old resistance becomes new support, continue upward. That's a triple bottom, but you gotta wait for that. This is the confirmation point. When it breaks through, that's not confirmation yet. It has to retest and bounce, all right? So you're watching for this bounce, and then you would enter there when resistance becomes support. So that's a bull flag, bear flag, double bottom, triple bottom. This is a fun one. This happens a lot. Inverse head and shoulders. Bam. You have the neckline right here, where the price gets rejected at once, twice, and then it breaks through on the third try. This is that's the left shoulder. This is the head. This is the right shoulder, all right? And then if you flip it, that would just be a head and shoulders. So after an upwards move, you have left shoulder, head, right shoulder. These are really beautiful to play if you want to play something to the downside or to know when to sell. If it fails to make that higher high above this, breaks through the neckline, that is a head and shoulders. That is a reversal pattern after an uptrend. Price is likely to come back down. Now we're looking at an inverse head and shoulders because I like to play reversals. And so you have this left shoulder, head, right shoulder. It kind of looks like a person upside down. And then you have price breaking through the neckline. Remember, the neckline is the point where the price gets rejected at multiple times. You'll notice what it is. And typically it's completely horizontal, but sometimes it can be diagonal. All right. So comes through, old resistance becomes new support. You would enter right here on this bounce. Tight. Let's see, what else do we got? We could do this for a long time, man. We got, I'll do a cup and handle. And this is something that people have misunderstood for years. A lot of people think cup and handle is a reversal pattern. It's typically a continuation pattern. It's actually the opposite. Can it be a reversal pattern? Yeah, it can. But I like to see it more as a continuation pattern. So you have this uptrend, you know, it's doing its thing. And then you have price come down and make a crater, handle, continue up. It's actually a beautiful thing to see. And the trick with this is it looks like a cup of soup, and then you have the handle that goes, let's see if I drew this to scale, 50% in, yeah, pretty close, to the cup. Yeah, that's about 50%. So you always want the handle to be about 50% into the cup. You want to see a lull in volume. So as this rounds out at the bottom, you want the volume, it'll be down here. You want the volume to decrease as well. You want to see a lull, and then you want to see it pick back up during the handle section, all right? So volume is important to watch. Volume precedes price. Volume precedes price. Volume precedes price. That's right. Always remember that. So that means, like, typically, just for an example, if a coin launches on day one, it's got like $20 million in volume. That's a good amount of volume for a Solana meme coin, let's say. All right. So that's enough for my ears to perk up and be like, all right, you have my attention. And then you look at patterns, look at who's behind the team, who's pushing it, is the meme funny, wallet distribution, you go to the Telegram, is it a cult community, are they really riding, sentiment online, all that stuff. So I want to make something clear that price action is determined by one of three things. So that is technicals, what we're talking about here, fundamentals, and breaking news. So technicals are these patterns, everything I'm teaching you now. Fundamentals in meme coins, or crypto would be like tokenomics, who's behind the team, what's the utility of it, the meme itself, is it funny? The fundamentals, the foundation of the token, okay? And then third is breaking news. So if on the news is like an asteroid is going to hit tomorrow, which is what it's felt like the past couple of days with this dip, which was pretty hilarious, a little scary, but you ride it out. And so if you have breaking news like that, or like a rumor of a war is about to start, that's breaking news, and that's going to affect the markets. It's going to affect what you see on the chart, okay? But the chart, technical analysis, is simply a graphical representation of traders' sentiment, buyers and sellers' sentiment, the market sentiment. And that's why I like TA, because I really don't have to focus on all the other extraneous stuff, the outside noise, because the chart is already telling me everything that I need to know. And we'll do some more patterns, but honestly, what I just showed you is the bulk of the patterns that you're going to see. So this is Bitcoin on the daily chart. You can do all the way down to a second chart. I don't recommend that, especially on Bitcoin. It doesn't really make much sense. The charts I like to look at are the daily, 4 hour, and the 1 hour. And then if I'm like timing an entry, maybe 15 minute or 5 minute. But this is the daily chart. So each candlestick represents 24 hours of price action. Now, I actually found this pattern from somebody else on crypto Twitter last night. Don't remember who it was, but that's the beautiful thing about crypto Twitter. You can use other people's work as points of confluence. Okay, so I was having trouble finding a pattern. This guy posted a chart. It was really interesting. So this is what I posted 15 hours ago at 5:03 a.m. This morning. All right. So right angled descending broadening wedge. Now that's a new one to me. I've heard of broadening wedges, megaphone pattern, whatever you want to call it. They said right angled descending broadening wedge. Now I know the top is not really straight across. It's a little bit down, but it's close enough to work. You got to realize that nothing is exact in this space. It's a bit of an art. And that's partially why it gets a bad rap. And I've heard that, some people make fun of it like TA is astrology for men. I think it's so funny, man. I don't believe in astrology. Who knows? Maybe it's right, maybe it's wrong. For now, I don't believe in it. But a TA is definitely something that will help any trader. But you can't just go off of TA alone. You got to see who's behind the team, look at the volume, the time in the market, many other things, all right? But TA is the basis of every trade that I make. And when you're making trades, man, there's so much to say. When you're making trades, you have to know your take profit and your stop loss before you're making the trade. Say you want to long Bitcoin, which might not be a bad idea. Do your own thing. But say you want to long it at 55.7, all right? So say you want to long it there. That's your entry. You always want your risk to reward. You want to risk half of what you're about to gain, potentially going to gain at the bare minimum, all right? So say your entry is right there. Let's put your stop loss at 45K. You want to double this at least, all right? So that's 10K, 20K. Let's put our price target up at 75K. All right, so this would be our TP. And also, don't sell everything at once. You want to part it out. I mean, do your thing, but from experience, you want to sell clips at a time. So 20% at different take profit levels. But I'm just making this for the sake of simplicity. So every trade that you get in, you have to know your take profit and your stop loss. All right. That is a must. Now, back to this pattern. I'd say expanding megaphone, to be honest. But it looks like this guy says right angled descending broadening wedge. They're showing that it's a continuation pattern. You have an uptrend, you have price expanding, and then they even did the measurement, which I showed you on the bull flag, same exact thing, all right? From the breakout upward, and this is looking like that, all right? So let me show you some examples of patterns that we were talking about. This is a new one. This is a morning doji, okay? Cool. Morning doji star. I like these a lot. So you have this really skinny, there's really not even a candle bar. It's just so skinny you can't even see it. Long leg at the bottom, kind of short wick at the top, followed by a really bullish green candle. That's what you're seeing right here. This happened in March of 2023. That's a reversal candlestick pattern. So downtrend, morning doji formation. You have this candlestick and then this bullish green one. That is a morning doji. It's a reversal candlestick pattern, okay? This pattern is called an Adam and Eve, all right? First leg is a V-shaped recovery, followed by a rounded bottom. Breaks neckline, flips resistance for a new support. That is an Adam and Eve. And that's found right here. Kind of ugly V-shaped recovery, followed by a rounded one. You have neckline right here at 17K. You have that resistance get flipped. Old resistance becomes new support. So this right here is gonna be a shooting star. So after an uptrend, you have this long wick at the top, you have this bar at the bottom, and you see that right here. So it's after an uptrend, bam, you have that shooting star, and then you have a downtrend. Let me show you a couple more patterns. All right, here's one right here. I mean, patterns just jump out at you after a while. So this is like some chop, and then you see a decent uptrend, higher high, higher low, higher high. This is a bearish engulfing. So this red candle completely swallows the previous candle in the uptrend. That typically signifies a reversal. All right, so price went up, bearish engulfing, ate that previous green one, and then you have a drop of, that was a hefty drop, 22 to 15. You see it again, like in between this downtrend. Huge bearish engulfing. Oh, this is nice right here. Nice, triple bottom. It's like catching a Pokemon, man. They are rare. So you got first bottom, second bottom, third bottom, neckline right here. Oh, this is beautiful. All right, I'm gonna leave you guys with this. Bam. And I'll do more for sure, but for now, dude, look at this. All right. So it's after a downtrend. That's a big drop. Wonder what happened there. 31K to 18K. And then instead of just being a double bottom, it's a triple bottom. So you have 1, 2, 3. Neckline is, actually I'd put the neckline up here to be conservative, right here at 21.6 thousand on Bitcoin. And you see price flip. Oh, this is a thing of beauty. This is why I love TA. Flips this old resistance, comes back, retests, pushes up again. Bam, pushes up again. So beautiful, man. So beautiful. Let's see. All right, this is a double top. I want to give you guys just a few more. So, look, price is coming up. First top, second top, neckline right here. Confirmation is when price breaks below that neckline at 41.5, continues down. That's just a reversal pattern, double top. That's a big, ugly double top. 1, 2, neckline at 58.3, price continued way down. So you could short that right here. Look at this. This is retesting old support as new resistance. I actually conducted technical analysis on the entire history of Bitcoin, at least like the important parts that jumped out at me. Here's another double top. Neckline. Bam. All right. Love you guys so much. This was the first episode of my technical analysis masterclass. I know you learned a lot, and I know you're going to make a ton of cash. Love you guys so much. I'll see you for the next video. Peace.